Hello everybody, it's Larry East with your weekly bulletin for the week of August 22nd. It was a volatile week for the financial markets this week. So if you have a stock portfolio, my suggestion would be not to grab your phone and check your stock values and maybe leave this month's statement alone when it comes in the mail, especially if you're not in the mood for it. So it's a tough week. All the three major stock indexes dropped at least 3% this week. So the beneficiary of the falling stock market, thankfully, was mortgage rates. So bonds and mortgage rates are a type of safe haven when investors are worried about stock market continuing to fall. They purchase bonds and they purchase mortgage rates, which helps our rates decrease because of the influx of sales. So good news on the mortgage side, not so good news maybe for your 401k. But as far as economic news, we got the first look at third quarter gross domestic product. So this is a first look. This will be as more data is compiled, it will be revised a few times, but it's a very strong reading and above expectations. It was expected to be 3.3% growth and it came in at 3.5% growth. So our economy is going and doing very well right now. In housing news, existing home sales for September. I like to look at existing home sales because it covers the majority of homes sold. The new home sales market's only about 10% of home sales. So this by far covers most of the homes sold. So now this report was for September. It showed year over year. So this year sales are slightly slower, about 4% slower than they were last year. Most of that's attributed to the tight inventory, and the September report did show inventory was at 4.4 month supply. That was a slight increase, so there is some more inventory coming to market. Average days on market were 32 days, which was up from 29 days in August. So we're getting a little bit more inventory. Homes are staying on the market a few extra days, which gives buyers some more options, which is good, and hopefully that will help sales increase. Now, median home price, this is nationwide, was $258,100, which was up 4.2% since last year. So homes have appreciated from the existing home sales report about 4.2% in the last 12 months. Now, what's been a theme that we've seen in most of the housing reports that have come out that are looking at home price appreciation is that level of appreciation has been slowing. Now that does not mean that home prices have been decreasing. It's just the increases that we're seeing are starting to taper off. We've seen very, very strong home price appreciation. So that level of appreciation is starting to wane a bit, and it's probably going to end up in that 4 to 5% range, which is much more of a normal rate of appreciation for our housing market. So that's a wrap for this week. Thank you very much for watching. If you have questions, if you have comments, either leave them below or reach out to me. Have a wonderful week.